Hey guys, it's Jerry McManus here again. Mr. 21 years in real estate serving the South Jersey area, now with Keller Williams. Wanted to talk about something really interesting today. It's called creative financing. One of the things that a lot of times folks have looked at, especially in recent months and a couple years, is that folks, they've looked at where the interest rates are and they're asking, is there another way? The short answer is yes. One of the things that you could be able to do is, number one, are adjustable rate mortgages. An adjustable rate mortgage is when you get a loan, but the first couple of years or the first few years are artificially low. And then what winds up happening is that over time, the loan resets. And after that reset, what winds up happening is that your interest rate will go back up to what would be considered a market interest rate. So how does that work out? It doesn't, like, say for the sake of argument, you buy, and this is generally speaking, you get an adjustable rate mortgage, your rate won't go from like 3 to 6% overnight. But generally what winds up happening is those interest rates step up over a certain period of time. And then at the end of their time period, what winds up happening is then the interest rate winds up capping. Just wanted to remind you, please hit that subscribe button and the notification bell, because I've noticed that a lot of you that are watching these videos may be missing out on important content. Let's not have that occur. So please hit that subscribe button and the notification bell so that we can stay in touch. And let's continue on with this video. That's a very broad way of going about it, and you definitely want to have a talk with your local lender to get more details on that, because that, like most soups, you can get many different kinds. So what else can we do out there for creative financing? Another one that seemed to be trying to come into vogue were assumable mortgages. Now, what's an assumable mortgage? Look at the FHA mortgages, VA mortgages that were put out. They're government-backed loans. And what wound up happening is that when those houses go to market, theoretically, what you're able to do is you're able to start picking up the payments from the current owner. So what winds up happening with that is that, say for the sake of argument, the owner bought a house at using an FHA or a VA loan 3-4 years ago when interest rates were a lot lower. So what winds up happening is that you pick up their term loan at that lower rate. Now, one of the caveats is that generally speaking, you're going to have a big deficit when it comes to the equity position that the owner has in the house, because if they've owned that house for, like, say 3 or 4 years, if we remember, the price of homes have come up dramatically during that period of time, so that therefore, even if they had, say, a $250,000 loan when they originally started, they may not have paid off a whole lot of that, but the house is now worth, instead of $260,000, $270,000, is now worth closer to $400,000. So going into that, you're going to have to account for the rest of that equity position in the home. Another one of the things that folks like to try to do is owner financing. Now, one of the things that we've seen in our market with owner financing, and this is one of those things that you can really start to wrap your head around, is that there's actually upwards of 40% of the homes in the United States do not have a mortgage. So if you have somebody that's been in their home for a very long time, rather than take a lump sum payment, they may wish to sell you the home and then just collect a revenue stream from that point forward, so to help them live out the rest of their lives. But that's good for a conversation that we should have if you want to explore those possibilities. So feel free to give me a call. My contact information is going to be there in the end screen, and look forward to seeing you on the next video. Hey guys, don't forget to hit the subscribe button and notification bell. This way we can stay connected. Here's my contact information should you have any questions. Otherwise, I'll see you in the next video.